All right, guys, let's talk about the stock market and let's talk about some ways that we can make money and do some analysis on the market. Now, before we begin, make sure you hit the like and subscribe button to the channel. Now, S&P 500, great day today. Nice move, almost like a 1.5% move on the S&P 500. Now, we always have to do some checks before we, start assuming the trade is good. Now, we had a breakout. Now we're having a pullback, right? So my stop loss was here, and I told you guys I will not adjust it in my previous video, and I will let it play out, and then if I do get stopped out, I'll buy back here. So now nice rejection at 407 here, which has been tested multiple times, as we can see going back here, and it came back down very close to my stop here at 398, and the buyer step right here in the morning and just let it play out, right? Sometimes you just gotta believe in your trade and just let it ride out, right? Because the number one thing you want to do is mitigate your risk. So we can see S&P 500 is trying to go back above. And today we had some nice volume as well behind it, which was a good positive consensus. If we look at it on a daily and we try to understand it, yesterday's selling volume was lower than today's buying volume. So this is giving me some sort of a positive outlook that this trade can pan out, and it can pan out really big to about 418. Now, once again, I don't recommend anybody to copy my trades. I just recommend you follow along to learn and see what your probabilities of success are. Now, if we look at this, S&P 500 does look like it's going to break out. It's staying above the downtrend line. That's another technical thing. It's staying above and consolidating above here. So that's a positive sign for me, because market is accepting this level, which is a higher low than this. So this is giving me good consensus that the bulls are stepping in. However, we have to be mindful that tomorrow is a big day with the Fed coming out with the interest rate decision. They did have an emergency meeting this week, so we will see how this plays out for us. Now, triple Qs are looking really good here, just like the S&P 500. They do look like they can have a bounce, and tomorrow's decision by the Fed could be a big day and a big game changer for the S&P 500 and the triple Qs here. And if we look at the smaller time frame on the triple Qs, they pulled back nicely, stayed above the support line that I have marked here, and now it's trying to look like it's going to go above. We always have a pullback to shake out the weak hands, and then it starts to rally and go the other way. Now, so far the triple Qs are looking solid. Let's look at IWM. IWM broke out, and this is exactly what I was talking about with everyone here. Multiple tests here. If it does break out here again, we're gonna see IWM take off and go to 190, 192. This is the next level that I have marked here for IWM. The 192 level is important because we can see that every time it has gone above this level 192, it's pulled back or it's rejected fairly close to it. So if it gets above 192, we have a clear break to 196, then to 200. So we have to really keep following IWM's the way it's going. And the other thing is small caps tend to lead when the market is reversing. So that is what we're seeing as well. So I'll show you guys what I'm talking about here. So we'll do SPY over IWM. So every time, okay, I'll do it the other way, sorry. IWM over SPY. So every time this is going up, this is the sign that the market is reversing, right? So IWMs tend to lead. You could see that happening in 2020, and even previously, if you go monthlies, you can go back to like 2008. This is 2008 when the market reversed. So the top, when it pushes up, that means IWM is outperforming the S&P 500. So we can start to see that we're seeing a similar turn happening right now. So that is something that we want to be mindful of and keep an eye on. So looking next at gold. Gold is something that I've talked about multiple times, and I think it has a good potential here to make some big noise. Okay. So with gold, as we can see, sorry, give me a second here. Gold, we can see that it's tried to break down and now it's pushing back above here. Gold is consolidating right above this zone, and I like gold and what it's doing. And as we can see, buying versus selling, the past couple of days there's been more buying than selling. So we want to keep an eye on that, and we want to be mindful that gold is still looking very bullish here above this trend line, above our my stop loss that I've taken. It's very profitable, and I think it has a good upside to break out to 186. The other thing that we do want to talk about is the VIX. The VIX is looking like it's going to fall, but once again, it's consolidating. It is not falling. It is consolidating right above this level here. And that is a little worrisome to me, because I think the VIX has a good chance of breaking out again to the upside and something unexpected happening. And we are primed for it with the Fed speaking tomorrow. As long as the Fed doesn't do anything hawkish, we should be all right. So overall, the market looks fairly strong. But however, I am going to stick by this. Whenever something's all green or all red, you want to be cautious. These are all volatile trades, and that we're getting, these are all volatile moves. So if you're a trader and you're taking advantage of them, great. But don't fall in love with it, because this is all volatility. So we want to see some good rotations happening. And once those rotations are happening, we can identify a trend, and then we want to take some long-term trades. All right, guys, this is enough analysis for today. I'll see you guys tomorrow.